Alright, so let's go in and look at an example. Um, just going to go to Canada for now, and you can go, of course, to the Viewers tab, Stock Viewer, and do some analysis on these stocks. You can go to your watch list viewer with all the different watch lists that we have available, some special watch lists, drips, monthly dividend payers. Uh, wow Dividends is a great watch list. The indexes themselves or indices down here, financials, consumer staples, consumers discretionary, healthcare. Or you can do what I do. I track quite a few baskets of stocks, and the marijuana stocks visually I can see when I come to the portfolio tab, because I created this quick folio in April when this industry group was kind of created for VectorVest. I can see that the stocks are rising again, so I'm just going to come to the top VST stock. Happens to be Organi, a marijuana stock, and it's rising nicely. So we right click on it and go to the stock graph and begin to plan our trade. So with a pen and paper handy, we start to look at our trade. I'm going to take off the last close here, and we can see from the date line, once I get it activated, that it closed Friday at $1.74, and back here it got as high as $1.85 on August 8th, but then did close at $1.74 also. So just a few cents, because it's a lower price stock. I'm just going to go a few cents higher than the last close as my potential entry price. And if you're a little bit more conservative, you could put your entry price in at $1.85 or $1.87, a little bit above the last price. But because it is a low price stock, I'm going to keep it fairly small. On a larger price stock, maybe in that $10 to $40 range, I might go 10 or 15 cents higher than the last close. Alright, so I'm going to write down our entry price is going to be $1.78. And then the most important part, we have to figure out if the trade goes against us, where are we going to set our stop or our exit price? When are we going to get out of this trade? So there's a few ways you can approach it. For example, I've got support and resistance on here, I believe, so I can left click on that. And actually right where I drew my line is a recent support area at $1.42. So you can see those levels across there. So one approach is to set your stop price a little bit below the last or significant or major support area, and that was $1.42. So maybe we would use $1.40 and see what that looks like in the spreadsheet as a potential exit price on the stop exit. Another approach that a lot of investors like to use is a simple percent. You can figure out an 8% or 10% or 15% dollar amount below the $1.74. That's another way to do it. You can put on the 40-day moving average, and it works out in this case. The price is above the 40-day, so that moving average is $1.57. So that would be another potential stop. If the price falls below that moving average price of $1.57, that could be your stop. And we also have the VectorVest stop price once I get the date line over to the right edge. And the stop price over here you can see is $1.51. So that would be another potential stop. So I've got all of those. And then of course you could take your horizontal line and maybe look for a closer resistance or support level, I should say. So here we had quite a few touches along this support area at about $1.59. So it supports again the idea of $1.57 right below your support, and that's right at the moving average. So that tends to work out quite well. So we can test out all of those and see which one works the best. In terms of a price target, well, the most recent high is certainly too close to the current price. We're anticipating that the price, if the market cooperates and the stock goes up like the rest of the industry group, it seems to be going up right now, that it could take out that previous high and go much higher. Now in the past, if you notice, I've got my horizontal line down here and here. So in the past, if I go there, we can see that the price went from $60 to $1.43. So that's about an 80 cent move on that, about 80 cents. And from here, let's just bring our line up a little bit. It went from $70 or 70 cents, I should say, to that $1.43. So that was a 70 cent move. So we had an 80 cent move and a 70 cent move already that we can kind of extrapolate from. And from this support area up to there, that looks like $1.25 to $1.80, so another 65 cent move or so. So we're in that sort of 65 to 80 cent move that we could count on. So if we look at our $1.74 and say add 70 cents to that, that would give us $2.44 profit target. So we just write that down and get ready to enter that as our profit target. That's a reasonable or sensible target price that we would expect to have a very good chance of reaching and take our profit from there. Or we could readjust our stop price, move everything up a little bit, take some initial profit, maybe a partial profit, or just let it ride, but just know we got to tighten up our stop then very tightly to make sure we don't lose any more than that particular gain. Alright, so we know our levels now based on an analysis of the stock chart, so the technical analysis. Now we can go back to the spreadsheet and do our what-if planning. Alright, so the first thing I'm going to do is just double click in the symbol box and type in OGI, and I'll come over to the date box, highlight the current date that's in there for the last trade analysis that we did, and now we'll go to the current date, which is the 10th month, and the third date, which will be Monday, October 3rd, and we type in 16 for the year. Okay, then we double check our portfolio size. If you're comfortable with 50,000 for a TFSA aggressive account, we leave it there. The max percent loss is 1%. If you're a more experienced investor, certainly you could come in and change that to 2%, which would give you more money to spend on the trade. So you could certainly do that if you're a more aggressive and experienced investor. But otherwise, certainly recommended we stick within Dr. Toledo's guideline. Notice here the max loss per position. When we change it back to 1%, the most we can lose on any one position is $500. We are dollar weighting, so we're planning a 5 position maximum based on this portfolio here. In this case, maybe that's we want to hold more positions, diversify a little bit further, so we could go to 10 positions, and that gives us a maximum of $5,000, and that is the risk-adjusted cost of the trade right now until we start to plug in the other information. So we set in the entry price, we double click in the entry price box, and we said we would enter if the price rises to $1.78. That would be our stop limit order, a buy on stop limit with our brokerage, and you can put that in as good till canceled or a specific date. You don't want to go maybe too far out in the future in case the price really falls. You might change your whole setup, but if the price on Monday goes to 178 or above, your trade would be filled and you would be in the trade. If for some reason OGI goes the other way and starts to fall Monday morning and never does hit your $1.78, well, then your trade would not be filled and no harm done. You just reevaluate at the end of the day and see what you would like to do with that trade or move on to another trade. The stop exit price, let's plug in the numbers. I'm going to start with the lowest or the widest or loosest stop. This was below that major level of support. We said when we drew that support line using the VectorVest support and resistance tool, it came out at $1.42, so we're going to go 2 cents below that, and our max loss would be 38 cents, giving us that total. Click in our target price again and just kind of overwrite that, and we said a $2.44 target would be reasonable based on the fact that 2 previous times the stock price from a similar support area rose about 70 cents, and so we're planning on that happening again as a reasonable target, so a 66-cent gain on that. So that then takes into account then our maximum cost of trade would be $5,000, but with this trade setup we could lose we could buy as much as 1,316 shares at $1.78 and still be within the $5,000, and it would still be within the $500 maximum loss per position. That would be a 21% loss. That may be a little steep for some investors and traders, and if it is, we need to do some more adjusting. But we do have a nice target gain of 37%, $868, and that's a reward to risk of 1.74 to 1. So not quite 2 to 1. We'd like to get it to 2 to 1, although again 1 to 1, if your win-loss ratio is 80 or 90% on a 1 to 1 ratio, that can be quite an acceptable trading plan or trading system as well. But ideally we'd like to be around 2 to 1 or 3 to 1. So maybe it's our exit price that's just a little bit too tight, or too wide I should say, too loose. The target price I think is a fairly reasonable target price. So let's start with the adjustment to the exit price and maybe come to the next one that was on our list, and it was actually the VectorVest stop price itself was $1.51, and that stop price is a 13-week moving average of price adjusted for the fundamentals of relative value and relative safety. So that's a pretty good exit criteria just on its own. It definitely is a little bit tighter, so there's more risk of getting whipsawed in and out, but it makes it a pretty reasonable trade, a 15% max loss. We can buy more shares with that tighter stop. That allows the cost of trade to go up to 3,296, and our target gain is still 37%. Our reward to risk now is 2.44 to 1. So with a low price stock, just any small adjustment to the exit price can make a difference. If we go to $1.57, which was the moving average price and just below the recent support area, that's certainly a reasonable approach as well. And that brings our maximum loss down to 11.8%, which perhaps for some traders is more manageable from a peace of mind point of view. Our maximum loss per position is still $500, so we're well within that. We can spend more on this trade, buy more shares, because we're still going to be within the $5,000 that we have for the portfolio weighting. Now, if we were intending to maintain fewer positions, such as 8, that will start to adjust things over here a little bit. Didn't make a lot of difference on 8, except for the maximum per position was raised, but everything else was the same. If it went the other way and said, you know, we eventually hope to hold 15 positions, well, then that's going to affect the adjusted cost of trade. We're going to not be able to buy as many shares. So I'll just leave it at 10 for now. That's our setup. Everything's looking good. You know, we're happy with the reward to risk. It's 3 to 1 now, 11% max loss, and a nice 37% gain if it goes in our favor. It copies the information into this bottom row, so we're going to left click in this first cell and left click in the last cell with the shift key held down. That allows us now to right click in there and copy that row. We come down here into the next available cell area. Now if I didn't want to maintain this trade, which was just a practice trade, I can just delete all of those. I'm just going through and deleting them. And then I can come to the left cell here and I'm going to right click. Again, we have our oops, I think I did copy these. Let me just double check here. I'll just go back and copy, come to the left cell, right click, and there's what we should see is the second icon in this version of Excel is what we want to use. You want to make sure you click on values. Whatever version of Excel you have, it may show up a little bit differently, but click on values and that'll just put in the values in here, give you the number of shares, your entry price. Now on Monday, if for some reason the price is triggered but you didn't get it at $1.78, maybe it triggered and by the time it was filled you were filled at $1.80, for example, you would just type that into the space there, and now you're ready to manage your trade because your stop price is set, your target price is set. You can again print this lower half out if you want to manage your trades that you've got in here. The next trade we'll just copy and paste right in here, and the next one right here. We can manage I think it's up to about 15 trades on this individual sheet, and then if we run out of room we can save this worksheet and go to the next spreadsheet in Trade Analysis 2 or 3 or 4, whatever we have available to us, and we can always open a new spreadsheet as well. So lots of ways to use this. The main goal, of course, is to plan your trade, both the target price and the stop loss in case the trade goes against you. What this does, I've been doing this now for a few months since Jamin first introduced this spreadsheet, and it really does give you peace of mind and really forces you to really work out a reasonable entry price, a reasonable exit price, both for the stop loss and the target price. And once you do that, you're in total control of your emotions and you're in total control of the overall trade, and it's a really, really good feeling, and it does lead to more successful trading and more profits for sure. Alright, so hopefully that helps everyone. I think you're going to enjoy and really love using Jamin's new spreadsheet. I think it's got a lot of really cool features. There were quite a few people that made a lot of suggestions and submitted ideas for enhancements to the spreadsheet. At the end of the day, we wanted to keep it fairly simple, but we certainly did incorporate some of the wishes of a few of you that emailed us with your suggestions, and I think we've done that and still kept it fairly simple to use. So good luck with it and good luck with your trading. Thanks for listening.